So I'm going to spend the next 15 minutes or so talking to everyone about what we believe is one of the most exciting areas of the tech landscape, namely SpaceTech, and specifically talking about the Seraphim Space Investment Trust, which had an oversubscribed IPO back in July of last year. So firstly, just to introduce myself, I'm the Chief Investment Officer and co-founder at Seraphim. Seraphim is a pioneer in space tech, having launched the world's first space tech fund back in 2016, and then more recently, as I've just alluded to, the world's first ever listed space tech vehicle, the investment trust that we're here to talk about today. So over the last 6 years, we've established ourselves as the go-to investment team for any space business globally. We've got a very strong track record of delivering shareholder returns, having built a portfolio of some of the highest profile emerging space tech businesses globally. So before I jump into talking you through the progress that we've made in the 6 months since we've invested, I thought I'd spend a few moments providing a brief educational overview, particularly for those of you that may be new to the space sector, to explain why this is such an exciting growth opportunity. So space is already today nearly a half a trillion dollar sector, and there is broad consensus among most major investment banks that the sector is on a clear trajectory to becoming a multi-trillion-dollar sector over the course of the next decade. And of course, as some of you may be aware, some of the world's most successful entrepreneurs, including the likes of Elon Musk with SpaceX, Jeff Bezos through both Amazon and Blue Origin, his rocket business, and closer to home, Sir Richard Branson with Virgin Galactic and Virgin Orbit, are all putting significant amounts of their own personal wealth into their space-related opportunities. So why are they doing this? Well, fundamentally, they're doing this because the economics of space are undergoing a fundamental paradigm shift that has already, in the last few years, seen the cost of accessing space fall by up to 100-fold relative to a handful of years ago. So underpinning this are two drivers that are illustrated on this chart. First, on the left-hand side, you can see dramatic falls in the cost of launch. This has primarily been driven by SpaceX principally, and the use of reusable rockets, so rockets that you can launch and then land and then launch again multiple times. On the other side of the equation, there's been a revolution in the satellite industry itself, which is illustrated here. So whereas 10 years ago, a satellite might be the size of a car or even a small bus, it would have cost hundreds of millions, if not billions of dollars, and weighed tons. The sort of businesses that we're backing and that are driving this revolution are making satellites out of the same componentry that you find in your mobile phone, your laptop, and indeed your electric car. So space is being radically upended by essentially repurposing technology that we all rely on today in terms of consumer electronics. So you can think of space as really having its PC moment. So if you think about the history of computing, mainframes moving to PCs, moving to smartphones that are now more powerful than the computer that sent man to the moon. Space for the first time is really benefiting from all of those similar trends. So that's driving massive reductions in the cost of accessing space. And that means that it's now possible for the very first time to deploy constellations of hundreds, if not thousands of satellites, which are creating a new digital infrastructure in the sky that are delivering enormous, unique global data sets and universal abundant connectivity. So this new digital infrastructure is going to deliver the capabilities that we believe are going to define societal change over the forthcoming decade. So the critical message here is, yes, space can be about rockets and it can be about satellites, but from our perspective, the real opportunity is space as a platform that is going to catalyze some of the mega trends that are really going to change our world for the better. So just to highlight a few of those, sustainability. Space has a critical role to play in helping and combating climate change. It's only from space that we can get a holistic view of the entire world. Connectivity, amazingly enough, nearly half of the world's population, the better part of 3 billion people, still can't get online reliably today. It's only from space that we're going to be able to bring those billions of people online. Think about the profound effect it will have of having billions more people able to go online, educate themselves and transact amongst a bunch of other things, helping to hopefully drive down inequality and reduce internet poverty. Likewise, mobility. If we think about next generation mobility, everything from Amazon drones delivering to your house, to connected cars, to even flying cars. All of those new mobile mobility platforms ultimately can't function without the sort of data and connectivity from space that I've been alluding to. So that's a bit of background on what the fundamentals drivers are. So today, one of the reasons that we're so excited about space as an area to invest in is that we think that the sector is right now at a critical inflection point. So just to explain this chart. So this chart shows the cumulative number of every single satellite that has ever been launched in the history of the space age over the last 70 odd years since Sputnik was first launched into orbit. So what this shows is there's been a total of somewhere in the region of 11,000 satellites launched ever. Now, amazingly enough, nearly a quarter of all of those satellites have been launched in just the last handful of years by 4 companies. And those 4 companies, including the likes of SpaceX, have been predominantly privately financed. And those 4 companies alone have clear intentions to put up at least another 10,000 satellites. So almost as many satellites as have ever been launched, being launched in the next few years by just 4 companies. And behind that, there are hundreds of other companies that have plans to put up hundreds of thousands of satellites over the course of the next decade. Many of these companies have already been financed and have already got their first satellites into orbit. So there is now a real flourishing ecosystem of privately funded space tech startups emerging, and it's those opportunities that the Seraphim Space Investment Trust is focused on. So having now gone through the educational piece, I'll now spend another few minutes talking through the progress that Seraphim Space Investment Trust has made in the 6 months since we IPO'd, based on the interim results that we announced last week. So first off, where have we been focused in terms of our activity? Well, we've been focused thematically on 3 key areas. As I've just described, our overriding strategy is backing businesses that are taking leadership positions in developing this digital infrastructure in the sky. So we invested in 3 businesses during the period, Isotropic Systems and Arkit that are developing communications, and Zona that's developing mobility. Climate and sustainability in its own right is a critical category for us, where we made 4 investments covering everything from weather prediction, illegal fishing, natural disasters, and carbon monitoring. And then lastly, space sustainability, dealing with the issue that space is becoming increasingly polluted with space debris, where during the period we invested in the 3 leading companies globally that are addressing this opportunity. We've had an extremely busy period in the 6 months since we IPO'd, having deployed a total of 136 million into a combination of primary investments and secondary investments. So that's buying shares from one of our previous funds, where during the period we completed 12 transactions, with another one addition to the portfolio announced post the period, on a truly global basis. So 3 investments in the UK, 6 in the US, 3 in Europe, and 2 in Asia. That included a number of follow-on investments into existing portfolio companies that were acquired from our previous fund, many of which we led those transactions, as well as adding significant new investments of high-profile growth stage investments. Final thing to note here in terms of why there's shading on some of these companies. Well, alongside our fund, we also run our own accelerator that's now also focused on space, that uses our relationships with many of the leading corporates to run a program that helps support businesses get their first round of financing. So we've had 50 companies that have graduated from that program. Such was the success of that program that last year Amazon asked us to run their own Amazon AWS Space Accelerator on their behalf. So the companies highlighted in grey have graduated from one of the accelerator programs that Seraphim manages. So just to give you a highlight on some of the different profiles of businesses that we've invested in. So these 4 companies here were referred to as retained assets. These were assets from our previous fund that Seraphim Space Investment Trust committed to purchase at the time of IPO, pending completion of their transactions. So Arkit and Spire both successfasdaqfully completed their listing on US public markets, Spire on New York Stock Exchange, and Arkit on NASDAQ. Just to give you a profile of what those businesses do, Spire has a constellation of more than 100 shoebox-sized satellites that are collecting high-fidelity information on both the weather, but also tracking every single ship on our oceans and every plane in the skies. Arkit is looking to put up a constellation of satellites that use laser communications to deliver quantum secure encryption. So we think about the events that are unfolding around the Ukraine crisis. I'm sure everyone can appreciate just how important secure communications is. Likewise, on a similar theme, ISI, which has the world's largest constellation of satellites that use radars to be able to image the Earth day and night and through clouds. Normal satellites that use optical cameras like the one in your phone can't see 2/3 of the world that's cloudy or dark. So ISI can image the world at all times of day and night. And that type of data has a massive role to play in responding to the crisis unfolding in Ukraine. And then lastly, D-Orbit, which has a spacecraft that essentially acts as a space taxi doing last mile delivery for satellites once they've been launched into orbit on a big rocket like SpaceX. So those are 4 high-profile assets that were all acquired during the period. We've also announced 2 further significant new investments. One leading the investment round in a business called Hawkeye 360. So they have the world's largest constellation of listening satellites that collect information about radio frequency signals. So this is absolutely critical for everything from combating illegal fishing, people tracking, and drug running, who oftentimes use, for example, satellite phones to communicate with each other. This is another example of where one of our portfolio companies has a very important role to play in combating everything that's going on in and around Ukraine. And then on the right-hand side, we participated in investment round of a Japanese business called Astroscale, which is the leading company that is essentially ensuring that space remains a sustainable environment for satellites to operate in. So what this business does is look to clean up all of the space debris that's created both from rockets and dead satellites, but also other forms of debris that may emerge, and also looking to service satellites in orbit, which we believe is a very significant longer-term opportunity. We've also just identified here followed-on investments in a number of companies. Only other one, I think, in the interest of time that I'll highlight is Isotropic, which is a UK company that is developing a satellite antenna that enables you to simultaneously connect to multiple different satellites in orbits. This is creating a mesh network of all of the satellite connectivity. This, again, is an area that allied nations are particularly interested in, given the need to ensure that you can communicate at all times in an adversarial environment, which I'm afraid we all now face. So just to give a summary of the overall portfolio, you can see here that there is a reasonable distribution across both the stage of companies, albeit the majority of the funds to date have been deployed into what we refer to as growth stage companies. So these are businesses that are revenue generating, have proven out their business model, but are pre-profit, whereas a much smaller proportion of the fund has been deployed into companies that are at an earlier stage. Geographically, we have a reasonably diversified portfolio on a truly global basis. A few things to highlight since the end of the period. One of the companies that I just mentioned, D-Orbit, where the trust acquired the holding in nearly a 10% holding in D-Orbit for 7.3 million in December. In late January of this year, D-Orbit subsequently announced its intention to become a public company through a SPAC merger with Breeze Holding Acquisition Corp. That transaction, if consummated, would value the combined entity at 1.28 billion, clearly implying a pretty significant increase in the NAV of the trust, which was not reflected in the results that we published as of last week. Now, clearly, there's no certainty that this transaction will be consummated, and if it is consummated, at what price the stock will trade relative to that implied enterprise value, but noteworthy nonetheless. We've also followed on into some of our other listed businesses, such as Spire, which, as with many technology companies, and particularly SPAC companies, have faced a period of significant turbulence in terms of performance of share price, and we've since completed several other investments. So to wrap it all up, a pretty strong start to our existence as a public company. share price performance of plus 25% during the period, NAV per share of 7%, equivalent on an annualized basis to about 15%, and at a fundamental underlying portfolio level, an increase in the fair value relative to the cost of investments in excess of 10%. Thank you very much. I'm very happy to answer any questions that you may now have.
You talk about space investment potentially reaching trillions of dollars by 2035. How much of this is publicly funded and how much will be privately funded?
Yeah, that's a great question. I think the short answer is it will be driven by both, but our expectation is that most of the growth, and certainly the areas that we're focused on, are going to be commercially driven. So if you're thinking about all of these constellations of hundreds and thousands of satellites and all of the infrastructure that's being created in space, that is very much being commercially driven. Whereas if you're thinking about parts of the market relating to space exploration, so people going to the moon, not going to talk about Mars, and that might well be more government driven. So both have an important role to play, but overall we see the primary trend as one being commercially driven.
Okay, so governments have enough money to invest. Sorry, will governments have enough money to invest in the sums you talk about over the next decade? Bear in mind the cost of their debt will rise with interest rates, and the global economy could shrink if consumer confidence takes a big hit with the Ukraine-Russia situation.
Well, okay, a few responses there. So first, just to refer back to my previous answer, the parts of the market we're focused on are commercial driven primarily, rather than government. Do I see there being risks to government-based space budgets, given the world in which we now operate? No, I see quite the opposite. I'm sure we've all spent time over the last week reading newspapers and seeing the news on television with various satellite imagery showing various things to do with the conflict. The need and demand for the types of data and insight and connectivity that my companies and others in the sector are providing, if anything, I would anticipate will grow very significantly, I'm afraid, because of obviously the very negative developments in terms of the geopolitical environment.
Thank you, James. You've grown revenues at 30% year for the last 4 years, according to your website, and targeting 20% growth over the long term. But as you get bigger, the growth will inevitably slow. How much runway do you see? 20% plus growth? Are we talking 10 years or more?
Right, so just to clarify, I think the 30% figure that you may be referring to there, that's the historic performance in terms of the IRR that we achieved and published as part of our prospectus relating to our old fund. So it's not the performance of Seraphim Space Investment Trust, where we're looking to target a performance of 20% annual increase in NAV at the portfolio level over the long term. So just to be clear what I'm saying there, it's not that we're necessarily expecting every year or year one to deliver a 20% return, but over the long term, we believe that that is an appropriate target based on the risk reward profile of where we're focusing. And certainly based on past performance, which is obviously not always a guide to future performance, we believe that that is also an achievable target, even as we hopefully scale assets under management through this vehicle over the same time frame.
Okay, there's one here. Why have you invested in New Quantum? What does it have to do with space?
So New Quantum is an interesting company. So we helped spin that company out of Cambridge University to participate in our accelerator. So it's a great case study of our model, frankly. It went through our accelerator. It then raised a round of funding from some of the UK's leading specialist VCs that we focused on. Its technology is quantum technology, but without getting into too much detail, many areas of quantum technology have direct applicability to the space sector. In this particular instance, it's to do with applications around quantum communications.
Okay. How much more investment are you planning in the next 3 years?
We've shown the cadence of investment that we're able to achieve. So a total of more than 130 million of transactions, of which 75 million of that was cash that we deployed in less than a 6-month period. The guidance that we gave at the time of our IPO was that we would be substantively deployed within a 12-month period on the 150 million that we raised. The results that we published show that we're on track to deliver that, and hopefully that should give investors some indication of the sort of cadence of investment that we might assume going forwards.
Okay, I've got time for one more quick one there, James. Just to be clear, how do you actually generate revenue?
So we're as an investment trust, we're not an operating business. No. We're an investment company, and therefore shareholders benefit through share price accretion, which should be driven by underlying increases in net asset value. So how we deliver return is to invest in companies and see the value of those companies grow, and in time IPO, as several of our companies already have, or ultimately get sold. So we're not an operating company.
Of course, okay. And just one final quick one. Since January, the share price fell below the IPO price. What caused that?
I should stress that it's now materially above the IPO price. There was across the board during January a very big sell-off on all things tech and growth related, as there was a transition out across global markets out of growth into other areas, precipitated, one might opine, by a combination of fears about inflation and obviously the geopolitical environment. But we have recovered relatively well since then.